You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
Okay, everybody. Today is August 18th, 2023, and here I am today with Johnathan Johnson, and we're going to be talking about the CEO Blockchain series, and I am really crazy excited about this conversation for a whole host of reasons. Jonathan's background is very unique. You're not supposed to say very unique, but it is truly unique in how he's been involved in what is such a transformational company and led it and been there for 20 years. So Jonathan, thank you for joining us, and I really look forward to a great conversation, however we go with this.
Dan, thanks for having me. Like I mentioned before we jumped on, I've been excited about this all week. It's always fun to talk to you. It's fun to talk about our business, including the blockchain parts of it. So I'm eager to have a good conversation, a great conversation.
So Jonathan, let's take a step back a little bit in time and go back to how you came across Overstock. And of course, Overstock today is the new Bed Bath & Beyond. And what a transformation it's going to be for the company today. But walk us back a bit and talk to us about your journey from a career standpoint.
Yeah, so I'm a lawyer by training. I was a corporate M&A lawyer in Los Angeles for 5 years before joining a startup software development firm that went public. I was that company's general counsel, later became its chief financial officer. And one day I was having lunch with a former colleague of mine who had been at that company, but was at that point the chief operating officer at Overstock. And I asked him what the chief operating officer at Overstock did. And he said, well, one of the things he did was managing outside legal counsel. And I said, wait a second, Overstock recently went public and you don't have in-house legal counsel? I said, you'll get my resume by the end of the day. And within a week, I was interviewing with the founder and CEO. And within another week, I was sitting as the general counsel of a newly minted, publicly traded company. And, I think my early job there was, I used to joke, sit in a broom closet, review non-disclosure agreements, and try and keep the company out of trouble. But I hadn't been there more than a few weeks when I volunteered to oversee a business project. We had a request for proposal come in from Palm, the maker of Palm Pilots, for those that are old enough to remember the personal digital assistant. And Palm had been liquidating its returns through eBay at the time and was looking to get a better return on investment from its returns. And so it was doing a request for proposal. And I could see that there was a contract to markup, and that was why it had come across my desk. But it was going to require someone to be involved in marketing and warehousing and testing. And there were just a lot of aspects to it. So I volunteered and said, I'd like to captain the project. And our CEO said, well, gee, what do you know about marketing and warehousing and receiving and testing? And I said, I don't know a lot about any of those things, but I bet I know more about all those things than anybody. And this project needs some adult supervision. And he said, okay, give it a go. And we won the RFP. We had a bake-off against eBay, and we won that bake-off, and we began to be the sole liquidator. This is when Overstock was truly a liquidator of Palm's returns. And it was right after that I was asked to be the 5th member of the executive team. And before long, our CEO said, Johnathan, you've really got a mind for business. Would you consider hiring a general counsel and taking more of a business/operations role? And that was appealing to me. And so one thing led to another, and I did that for several years. And back in 2008, I became the president of Overstock, which was then just an online retailer. We had morphed from being a liquidator to a general merchandising retailer, and I did that for 5 years before stepping away and having what my wife refers to as an expensive and harebrained midlife crisis. And I ran for political office. I ran for governor in the state of Utah. At that point, I was a board member at Overstock. I stepped away from day to day and ran for governor, and thankfully lost because it's been better for my career. At that point, the Overstock board asked me to come back and run what was a very fledgling blockchain incubator business that Overstock had stood up. And so I became the president of what would become Medici Ventures, which over time took ownership interest in, I think it was 21 different kind of Series A or truly startup blockchain businesses. And then about 4 years ago, when our founder left, the board asked me to be the CEO of the entire enterprise. And so I was kind of had 2 hats for a time until we found a better place for Medici. But that's kind of been my career journey, from a corporate M&A attorney to running a online retail business, to investing in blockchain companies, to now being the CEO of a publicly traded company. And I always tell my children, I have 5 sons and their friends, that if they want to be successful in business, there's 2 things they should do. One, be a continual learner, because when I was in law school, e-commerce wasn't a thing. And when I was the president of Overstock, blockchain wasn't a thing. Cryptocurrency wasn't a thing. But if you're always learning, you'll be ready for the next thing. And the second piece of advice I give to those who are willing to listen to unsolicited advice, and my kids have to put up with that, is volunteer. Volunteer for projects. And give the example of volunteering for that Palm request for proposal project. That really launched my career from being a lawyer, scrivener, a deal guy, to being someone who was involved in the business, something I liked a lot more. And so learning and volunteering, I think, have been kind of the hallmarks of my career and have been good for me.
Yeah, I can see why. I always believe that curious people love to learn, and they also like to volunteer, which you seem willing to do. And as a CEO, you have to be learning all the time. So I think that's so important. So let's jump right into the key question. Today, you're really the new Bed Bath & Beyond, and that came about through you becoming a stalking horse. By the way, I have this vision of you not as a bronco but maybe a stallion rushing in when you saw the opportunity. How did the Bed Bath & Beyond opportunity come about?
So we have been looking at Bed Bath & Beyond for some time. It must have been 3 or so years ago. A bank brought us the idea, this was during the height of the pandemic, of maybe acquiring Bed Bath & Beyond. And we did some diligence on it. There were parts of its business that we really loved. We loved its customer base. There was a lot of overlap in the demographics, the behavioral demographics, with our customer base. They liked deals. They liked promotions. Everyone knows the big blue coupon that would show up in the mail from the old Bed Bath & Beyond. We loved the Bed Bath & Beyond name being synonymous with home. because that's who we were morphing to. We were at that point on a journey from being a general merchandiser to being a furniture and home furnishings retailer. So those are the things we really liked about it. What we didn't like was it had a huge debt overhang, and we didn't like all the brick and mortar stores. We continue to feel that the world is trending toward online. And so rather than go in and felt like trying to catch a falling knife, we just kind of watched, recognizing that, it might go out of business. And then kind of in the second half of last year, there were a lot of rumors that Bed Bath was going out of business. And so we were, working with some of its suppliers who were getting less comfortable with the payments from Bed Bath and increasing our bed and kitchen and bath offerings. Bed Bath got an investment that kind of let it survive a little bit longer. And I actually think that helped us in the end, because when the old Bed Bath & Beyond finally declared bankruptcy, I think its ability to continue as a going concern had passed. If it had declared bankruptcy 8 months earlier, someone might have bought it as a going concern. And at that point, when it declared bankruptcy, we thought we can buy the pieces of Bed Bath & Beyond that we really like, the name, the customer base, some of its intellectual property, the data, without having the pieces of it we didn't like. Debt was being erased in bankruptcy. We didn't want to purchase the physical stores. And I think some of those physical stores were actually wound up being purchased by companies that's turning them into pickleball courts. So, there was a higher and better use for them than selling what we wanted to sell. And so we made a bid for what we wanted. And in the bankruptcy terminology, the trustee chooses the highest bid it sees and calls that bid the stalking horse. And the stalking horse then negotiates a contract with the trustee. And then there's a second auction where anyone who's qualified can bid for what the stalking horse is willing to buy. And for us, it was the name, the intellectual property, the customer base. And at the end of the day, I think our offer was significant enough and unique enough that no one chose to show up to bid against us. And so our stalking horse bid turned out to be the final bid. And at the very end of June of this year, we won the auction, we closed the deal, and within 14 hours, we launched the new Bed Bath & Beyond site in Canada. And we wanted to do that as a beta test, to iron out any wrinkles we might see. And that went very well. So a month and a few days later, on August 1st, we launched in the US, which is 98+% of our business. And thus far, so good. It's pretty good. So we like having this new name. And the thing that we really liked about this opportunity was we've long known that Overstock was synonymous with something we no longer were, being a liquidator. We have a very good business model weighed down by an incorrect name. And rebranding is hard. If we had picked a new name, it would have taken years and hundreds of millions of dollars to associate that with home to get it moving in the market. Bed Bath had a great, well-trusted, beloved name that its natural meaning was who we had become, Bed Bath and a bigger beyond. But it had a business model that over time had begun to pull it down. So there was a good business model, a good name, each had a boat anchor on it. By purchasing the name out of bankruptcy, we were to rid each of those two boat anchors, put the two good things together, and we really expect now we've got a boat that will sail sleekly and quickly into the future as a online home furniture retailer known as Bed Bath & Beyond.
Yeah, and you know, before the interview, I have to say that I talked to my wife about the things that we bought from the old Overstock. I'm going to call it the old Overstock, right?
Yeah.
And yeah, I mean, exactly what you said is right, meaning that her perception was that she was really a value buyer, right? And that's going to be the case anyway, right? But with the new Bed Bath & Beyond, you're going to gain even further traction into a different group of folks and reaffirm, I would anticipate, those are already happy with the old model. So I get it.
So our focus is really on taking those legacy Overstock customers and making so they feel comfortable coming to who we've become. And so far, we've seen that. There were a lot of legacy Overstock customers that we felt like we had to reconvince every time they came to purchase. They would, maybe find us through searching on Google as they searched for leather couch, leather sofa. And we would show up and it would look like a great deal, but unless they really knew us well, they had to wonder, are they getting last year's goods? Are they getting damaged goods? Are they getting something that is Overstock? Now, when someone does that very same search and finds that very same product for the very same price at the new Bed Bath & Beyond, that's really a name that I would say an iconic brand that they know and trust. And there's not a need to convince them that they're getting the product they want for the price they want. That's what this new brand does for them and for us.
We touched a bit on the client experience, which is really super important, right? You acquired a massive number of opportunities, a list of folks, but the vendor relationship also expanded. Talk to us a little bit about that, Seth, because at the end of the day, I could be wrong on this statement. Yeah, you're a merchandiser, but you're a logistics company as well.
What we really are is we're an asset-light business model that utilizes a dropship model that relies on suppliers to provide us merchandise we can sell for them that they can drop ship. And as Overstock, we knew we had some headwind, but we really didn't know with merchants, but we really didn't know how stiff that headwind was until we changed our name. There have been brand name suppliers that we have tried to work with for years. And either they wouldn't work with us, or when they did, they would only open a portion of their catalog to us. When we became Bed Bath & Beyond, and frankly, even before we became, but once we knew we were becoming Bed Bath & Beyond, that group of suppliers, rather than our working to get them to talk to us, started banging on our door saying, we want to do business with Bed Bath & Beyond. We want to open our entire catalog to Bed Bath & Beyond. And so, you will see name brands that we had a hard time getting as Overstock already for sale on Bed Bath & Beyond with, knock on wood and hard work from our merchandising team, more to come. We really think that this name, as good as it is for customers, it's even more appealing for suppliers because there is no odor of liquidation associated with it at all. It is selling on a site that they've sold on for years that they're very comfortable selling on again now.
So to me, your business model is unusual in that you're asset light, you're selling merchandise. So the B2C model has challenges, but absolute benefits. Now you actually, earlier in your career, you were mentioning software company, right? How does that experience integrate with you as the CEO of Bed Bath & Beyond?
Well, we view ourselves as an online home furnishings company that is very tech enabled. And so that experience being a general counsel and then a CFO of a software company is really relevant here. Of our 860 non-cost of goods employees, roughly half are technologists. So much of what we do involves technology. I mean, I sometimes joke, I'm not sure I can go use the restroom without a development team and a product manager to help me, because everything we do requires a development team and a product manager to help get it done. And so we really do view ourselves as a technology company. And that means that for our suppliers, our systems need to be really good so they can easily integrate into us, easily load up product and copy, easily get the analytics they want, easily get the data they need to continue to plan and develop new product to sell on our site. For our customer, that means as we get more products on the site, those products need to be easier to find. An endless aisle, that is e-commerce, is only as good as the findability of a product on an endless aisle. And so product findability is crucial for us. Easy delivery and support are crucial for us. Self-service by the customer and or talking to an agent who knows how to use the technology. So everything we do has a technological bent and touch to it that I think makes us better. We are an asset light, and I think we've figured out how to do that. And we've now have 13 consecutive quarters of positive adjusted EBITDA, which is really something in a industry that probably for the last 18 months, 6 quarters at least, has been in a recession. The US may have avoided, again, knock on wood, a recession, but the home furnishings and furniture business post-pandemic has been in a recession with mortgage rates breaking 7, this week. It's a hard space, but our being asset light has allowed us to do this in a profitable way, come the tailwinds of the pandemic or the headwinds of the post-pandemic toughness of our industry.
So you also spent some time as president of Medici. And, for me, that's what drew me to the stock in the last 5 years. I go back as far back as 2002 when the company came public, but that's a whole nother story. How did you come to the decision to, basically outsource that role after, for so many years, building it and being the president of the firm, Medici?
Well, first, let me talk about why we were so enthusiastic about blockchain and why we built up Medici, and then I'll talk about, why we've outsourced it and why we think that was the right move. I have to go back to a story from 2013. I was at that point still the president of Overstock, and my high school age son, one of them, was kind of lolling on the couch like only a teenage boy knows how to do. And he said to me, "Dad, why doesn't Overstock accept Bitcoin?" And I had to say, I said, "Porter, I don't even know what that sentence means." And he goes, "Well, Bitcoin is this," and he explained it to me, and I started researching and delving into it in the fall of 2013. And at one of our executive meetings toward the end of the year, one of our senior vice presidents asked that very same question to the CEO and to me: "Why isn't Overstock accepting Bitcoin?" the good news was I knew what that sentence meant. And our CEO knew what that sentence meant. And he had been studying cryptocurrency and a bunch of things. And we said, you know what? We should. And he made a comment in the press early December. We were thinking about accepting Bitcoin, and we might do so in the second half of 2014. Well, some of our technologists came to us and that week between Christmas and New Year and said, why are we waiting so long? Let us get Overstock to a place where we can accept cryptocurrency. And so in that week between Christmas and New Year's, they worked furiously. And I think it was something like January 9th, 2014, we became the first major retailer to accept Bitcoin. We quickly learned that as cool as cryptocurrency was, that it was that underlying blockchain technology which could be world changing. And so we began making investments in a few companies that were using blockchain technology first to try and transform the settlement market in stock trades, something Overstock kind of had a history with and cared about. Then later, in a company that was mining Bitcoin that later pivoted to using blockchain in the financial markets. But we really think that the distributed ledger makes it so that you and I can have a digital handshake without intermediaries that lets us have a trustful interaction without relying on a bank or a broker or something else. People often call blockchain trustless technology. I think that's a misnomer. I think it's trust creating technology, but without the intermediary that adds friction in the form of time, fees, fraud sometimes. And so we got very excited about that and built up this portfolio within Medici Ventures. So when I became CEO of Overstock, it was really a pivotal time for the company. The company writ large, the e-commerce business and the blockchain portfolio were losing money. And the e-commerce business was losing share. Now, the blockchain business wasn't really losing money per se. It was investing money, but that took money. And there was no immediate, these were startups. There was no immediate payoff on the short-term horizon. And so, we were fending off a going concern opinion from our auditors. It was a dire time for the company. And so when I looked, how does this company survive? We needed to make the retail e-commerce business grow and turn it profitable. And to do that, we either needed to hire someone else to run the blockchain business, Medici, which I had been doing, but couldn't really, had 2 full-time jobs at the time. But as I interviewed people to do that, it became clear to me that what I was really looking for was a venture capitalist. And I thought, well, I could hire one venture capitalist to be our in-house person, or we could form a limited partnership and have a venture capital firm do this. The professionals do it with a group of people doing what one person would do. And so we decided to engage a venture capital firm, Pelion Ventures, and they became the general partner, and Overstock is the sole limited partner. And Pelion is very good at nurturing and getting out of the nest technology companies to fly. Now, like any venture portfolio, there'll be some dogs. There'll probably be more dogs than winners, unicorns, if we're going to go with animals. But that's what Pelion is doing now. And so we really had a choice. We could walk away from those investments, and I didn't like that because I thought there were some good ones in there. We could hire someone to do it and get a little bit of expertise running it, or we could outsource it and get a lot of expertise. And internally, the name of that project was Project Boarding School, because I kind of said we've got these 21 children, so to speak, in the portfolio, we could kick them out of the house and kick them to the curb and be done with this. That didn't feel like the right thing. We could hire another nanny to run it, or we could send them to a great boarding school, and it would help some of them get into the Ivy League schools and, blossom and flourish. And that's what we chose to do.
And is it a coincidence that your firm's in Utah and so is Pelion?
I don't think it's a coincidence. We did talk to firms in the Bay Area. We talked to lots and lots of firms. Pelion, I had some relationship with some of the principals of Pelion from before. They were good at it. They were excited about it. And so we knew we would get the attention. And in a general partner, you want someone who's going to give you full attention. One, because they were excited. Two, because we knew them. And I guess three, kind of, because they were close. But, had it been a firm, and we talked to some of the, blue chip VC firms in the Bay Area, had they been as interested, we could have easily picked them. But Pelion felt like the right choice, and they've got as good a track record. I mean, I think they can put their yardstick up against anyone and measure pretty well.
Listen, I think I told this to Matt Mossman, who is the managing partner of the deal that we're talking about, meaning Medici, how jealous I am about living in Utah. So I think that's probably an additive benefit as well, because it's beautiful there.
We love it. We have a great campus where our headquarters is. It's a great place to recruit people to. But during the pandemic and post-pandemic, we've become much more skilled at having a distributed workforce. Some are remote, some are in the office. And that's really helped us, I think, upgrade our talent, both at the C-suite level and everywhere below. And so when people come to Utah, they love it. I'm not a Utah native. I'm 24 years here, and I consider myself as close to a native as you can get. We've loved raising our family here. I've loved building businesses here, and I love being an employer here.
So coming back to the distributed ledger and blockchain, as a venture capitalist, where do you see the blockchain having an impact on retail?
That's a really interesting question, and none of our 21 investments was retail specific. But to answer your question, I think it will help prove provenance of goods. So I think one of the first places it will be useful will be in luxury brands, where knowing that you get, knowing you're buying something that's real, whether that's a Coach handbag or a fine bottle of wine, will be important. I think it will also have great use in the agricultural space, where you can know where products came from, what kind of, mixing in the Internet of Things, how it was fertilized, how it grew, what the weather patterns were. I think when there are recalls in the future, they won't need to be as broad-based, because we'll be able to pinpoint where the grain came from or where the coffee beans came from. And we won't throw out entire warehouses full of product that had coffee come in from all over the world, but we'll be able to say the contaminated product was from this farm and limit the waste that way.
I think Walmart's involved in that kind of technology and innovation, as an example. And absolutely, I can see how that would transform the retail industry and give confidence to people about what they're actually purchasing. So we'll see how it all evolves, of course. So,
And one of our portfolio companies, one that I'm bullish on, is a company called Grain Chain, which is doing just that. And while it's called Grain Chain, it could be called Coffee Chain or whatever the commodity is that you want to monitor. And in fact, it does good business down in Central and Latin America in the coffee space. I think that has great promise. And whatever it is that you want to monitor, Grain Chain knows how to do that.
Yeah, we had the opportunity to visit with the CEO who runs that company, and the critical part to me is how it's going to affect cost of capital in that area, right? The farming's very inefficient there. Farmers are disadvantaged by very expensive capital, and this seems to be very user friendly for the farmer. So it's a very interesting model because it doesn't cost them anything, but the financing side of things will benefit them because it'll be lower cost capital. I think I have that right?
For sure. And if you've talked to Louis Macias, the CEO of Grain Chain, you've talked to a real creative and innovative thinker. He knows what's going on. But part of the problem that farmers have dealt with for time immemorial is getting paid quickly and getting paid fairly, and taking their, let's use corn as example, to the grain elevator. And there's only a certain radius that you're going to drive your product to, and there's only so many grain elevators, and you hope you have an honest broker there who pays you for the weight of the grain you give, the corn you give, and then pays you quickly. But usually the payment is 30, 60, or 90 days later. And most farmers are buying seed on credit, and then they're hoping for a good harvest. And then when they get the harvest, they still have to pay back their banker. And what Grain Chain's allowing is for immediate and accurate payment upon delivery. And they're using a blockchain to do that. And just think, if you're a farmer and can cut 30, 60, or 90 days out of your payment back to the bank on the loan that you took, that's real money that, when you save, goes to your bottom line. And for small farmers, that's significant real money that goes to their bottom line.
And if you're an institution who's loaning that money and how it's being spent and can keep track of that, well, that's a credit decision and a benefit, right? So you're going to loan them that money at a lower cost.
Right. Your risk assessment will be more accurate, and that lowers the cost.
Johnathan, can we also ask you about any of the other companies that are in the portfolio?
Sure. I mean, we talk about some. Annually there's Medici Day that Pelion hosts. Another one that we like. We're, in addition to owning as a limited partner through Pelion, we have a direct ownership in Grain Chain. The other one we have a direct ownership in is T0. And we like that company. We like it a lot more after ICE invested in it as a strategic partner, ICE being Intercontinental Exchange. ICE knows how to build exchanges, and that's what T0 is trying to do. And it's kind of our oldest blockchain investment, but it's finding the right product in the right market is important. And I think the T0 CEO, David Goon, is being very thoughtful in doing that. And whether that will be in art, or they've tried in the past luxury hotel properties and fractionalizing the ownership of that, or maybe being able to own your favorite minor league baseball player, a piece of that contract. There's a lot of things. There's a lot of use cases, and I think T0 is being very thoughtful, making sure the technology is right. I like that one too, but again, takes time. And I don't think the last 18 months have been kind to the crypto space, between FTX and SBF and CZ and any other set of initials that are associated with the space. It's been tough. T0 is in a good place because it has an exchange, which, is FINRA approved. It's properly regulated and runs under the regulations. I think ultimately that's going to be a good moat for it when the regulation finally gets better understood and we know if crypto is a security or how these other things should trade as securities. That bodes well for T0, I think.
Is there a third? Because I think there are 18 now. And listen, let's be honest. Like I think you pointed out, some will be winners and some may not be. And so there's no projections out here at all. But it's a definite part of the new Bed Bath & Beyond.
Right. I mean, and look, I like to say, with a portfolio of 21 startups, if 1 to 5 hits it big, 1 hits it big, will have been very successful. If 1 to 5 hits it big, will be more than very successful. But I suspect that of the 21, that the 15 to 20 that don't hit it will fail before the 1 to 5 do hit it. And so, that's why when we disclose how we're holding these on the books, there's mark to market and there's ups and downs, and there'll probably be downs before there are meaningful ups. I guess another one I would talk to, and it's not maybe as highlighted as some of the others have been in the past, but it's FinClusive, which really helps banks do AML, anti-money laundering, and KYC, know your customer, process using blockchain, where once I have been AML'd and KYC'd and my identity is then on the blockchain, it's much easier for me to become banked. And there are whole swaths of the world, including, fairly significant percentage of people in the United States who live an unbanked life. And that's because anti-money laundering rules are what they are and probably should be what they are. But the sieve is probably a little too tight, and it keeps honest people out of the system too. And I think what FinClusive is doing to try and help use the blockchain to properly ID people so that banks can do that AML and KYC work in an easy, quick, reliable way, that's solving a problem that needs to be solved. Making sure it then becomes commercialized. That's always startup CEO's trick. But I think it's found a problem that needs to be solved, and now it's figuring out how to commercialize it in the right way.
Now, you've been a great steward of capital as the CEO. You still have $300 million in cash on your books. Are you looking through, looking at other companies, a lot of opportunities? What's that? How are you filtering through that pipeline as well?
So, like any company that takes calls from investment bankers, and we get pitched a myriad of ideas. And in most of them, it's pretty easy to see they don't make sense for us. We like our asset-light business model. It's one that lets us make money. When we look at deals, we look for things that help us move the ball forward, will be accretive to the top and bottom line to our home business, that help us with our technology, that are asset light. We get pitched, buy this mattress company, all that kind of deal all the time. Well, look, we have a lot of mattress suppliers and we don't have to own any mattresses. And I think if we bought a mattress company, we might get a handful of mattresses for less, but we would be competing against all of our suppliers, and that would be problematic. So that kind of deal has not been interesting to us. How will we use this $300 million? I've let the street know in our last several calls since we announced the Bed Bath deal that we're going to spend more on marketing. We have a unique opportunity to grab and convince customers that the new Bed Bath & Beyond is a place for them to shop. We acquired a massive customer list from the old Bed Bath & Beyond that we want to convert to be customers in the new Bed Bath & Beyond. And so those lists, in some respects, are a wasting asset. And we need to spend money to make sure that we get as much as we can out of them. So I've told the quote unquote street that we're going to stray purposefully, deviate purposely from our financial recipe card for a time and probably spend more on marketing that we have that will impact the bottom line. And we're willing to grow the top line while losing some money for a period, for a few quarters. So it's nice to have that healthy balance sheet. It let us play offense in a time when many in our industry are playing defense, and make this Bed Bath acquisition and then spend to ensure that the Bed Bath acquisition will be successful. So we continue to look at deals, but it's nice to have this money to spend to play offense in a time when people play defense. And historically, if you look at companies and how they behave during downturns, it's those that are playing offense rather than cutting headcount and playing defense, and that when they tend to tick up a little during the downturn, when the economy spins back up, they slingshot out of it and their growth is accelerated. And we've studied that a lot. We think that's who we can be, and that's why we're playing offense today.
And really, when I think about the Bed Bath & Beyond opportunity, you're a platform for growth at this point. And the interesting part about this past 12 to 18 months is you're a platform for growth today, but a year ago, you were not growing, you were shrinking. Your management is intent-based leadership, as I understand it. I want to ask you about that in the context of moving from just being a steward of the company to now becoming a growth engine. Hope that makes sense.
Yeah, and I can start my answer to that question by giving an anecdote from the first week when I became CEO of Overstock. I had not been involved in the day-to-day of our e-commerce retail business for about 6 years. I'd been on the board, running for governor, and then running our blockchain portfolio. When I went to the first executive meeting for the retail business, there were two things that struck me. One, the issues and problems they were talking about were not very dissimilar. Many were the same from the things we've been talking about when I had been the president 6 years earlier. So I took great comfort in saying, I got this. I can run that business. I can run this business. But the second thing I noticed, and this goes to the intent-based leadership question, was everyone in the room was looking to me to make the decision. And I purposefully at that meeting did not sit at the head of our table in our boardroom. I actually sat in a pew that was along the wall, and I let our president run the meeting. But people kept turning around and looking to me to make a decision. And I knew the decision I would make, but I also knew that if I made the decisions on things that others should make decisions on in that first day, I was going to set a precedent and I was going to establish a pattern that I should make decisions. And my view is when you have people in your organization who are both competent and have clarity on the objective of the organization, that you can give them a lot of control to make decisions on their own. So I kind of look at it as a X and a Y axis. If you want to move people up on the control axis and give them autonomy to make decisions, they have to be far along on the X axis, which is competency and clarity. And so intent-based leadership is really making sure we hire smart people, and I think we have, capable people, experts in their field, and then being very clear on the objectives. Here's what we want to do as a company. Here's who we want to become. And then letting them decide the means of getting there. And coming to me or coming to their managers and saying, if you're my manager, Dan, I would say, I intend to do X. Rather than say, Dan, here's a problem I see. What should I do? You probably know, but you may not know. But if I'm the expert in the field and I say, Dan, I intend to do X, you'll probably ask some questions of me, make sure it sounds right, and then say, giddy up, go do it. That way you have a force multiplier. When you if I micromanage, we can only do as much as I can do in a 24-hour day, which at some point, as we get bigger and bigger, is less and less. But if I have good people and we practice intent-based leadership where they're clear and they're competent, and there's a little bit of guardrail on what they do because they say, I intend to do. Maybe they don't see all the pixels in the picture. And when they don't, they come to me. I'll say, well, have you thought of this or that? And if they haven't, they may change their intend to statement. But it really gives people more autonomy. And when people feel in control of their lives, their work lives, I think they work harder and they work smarter. When they're micromanaged, it's just a job. And that's why I love intent-based leadership. It's better for the organization and it's better for the individuals in the organization.
Yeah, I think we operate that way at Tidal. So we're going to be wrapping up pretty soon here, but I want to end the discussion with two questions that I always ask. And the first question is straightforward. And I'm going to isolate it a bit and say, don't include retail and don't include finance. What industries do you think will be most impacted by blockchain?
Well, I'm going to answer the one I think should be most impacted, but it's been hard to get traction. And as we, start our primary presidential debates later this month, I think voting should be impacted. Now, whether it will be or not is hard to tell, particularly in the US where voting is done by the county clerk at a county by county level across 50 states. I think in some other countries where it's more centralized, probably has a quicker adoption. But to be able, there are people that want to have voter ID and there are people that want to make sure it's easy to vote. Blockchain lets you do that. Lets you do both. Once you're determined who you are and are registered to vote with your biometrics on a smartphone, this becomes the voting machine. And it becomes a software as a service industry rather than a hardware industry. And you can create a paper audit trail where I know not that Dan voted for X or Y candidate, but that someone who was allowed to vote and was registered to vote, that's you, I just don't know it's you, voted for X or Y candidate. So your vote is auditable, but remains secret. I don't think either of the parties in the United States really have an interest in solutions. They mostly have an interest in complaining about the voting process, but blockchain could really move the needle there. The other place that I think it has a lot of potential, and I know you said to stay out of finance space, and I think this is proliferally there, but it's different, is a central bank digital currency. You know, crypto, people have varying views of crypto. And one of the views on crypto is Bitcoin is like gold because it's finite. There's only a certain number of coins that'll be mined, and that's its digital gold. Well, look, I don't think fiat currency is going away. Even with the Argentinas of the world who make a great case that it should have gone away a long time ago by busting through in our lifetimes 4 or 5 different currencies. It's not going away, but it could be democratized by making it digital so that you're not relying on all these levels of banks to get it down to you and to me. And I think central bank digital currency, particularly in nations where many are unbanked, but almost everyone has a smartphone. In fact, in some countries, smartphone penetration is triple digits, where being banked is single digits percentages. You know, people will have 2 smartphones, but no bank account. A digital currency makes a lot of sense there. So, you know, Medici has companies doing both those things in its portfolio. Whether my hypotheses are right or not, time will show. But I think those are 2 places that 10 years from now could be something that's adopted in a meaningful way.
When I think about the voting idea, I'm also reminded that it's immutable, right?
It is immutable.
So if you can audit it easily, it's convenient. Why couldn't it be a transformational solution? So we can only hope so.
You think about convenience, the group that has the hardest time voting, and frankly isn't allowed to do so on a secret ballot, are members of the US military that are stationed overseas. These are people that are on the front line of democracy, that we make it almost impossible for them to participate in democracy. And if they could vote on a smartphone in an immutable, auditable, secret way, it's just better. It's just better.
Wow. I have to ask one more question, although that actually is probably a perfect place to end. But I've done about 20 of these interviews, and I've always asked the second question. So looking back, 10 years from now, what do you think people are going to look at and say, it was so obvious that change would have such a effect on society or an effect on different things? Like when you look at, as an example, the internet, looking backwards, it's probably so obvious today to think that, well, not everybody needs to go to the office anymore because everything is done on the internet, or at least so much can be done virtually. What do you think 10 years from now or 20 years from now, people will look back and say, the blockchain was so obvious that things were going to change as a result?
Well, I think the digital wallet will become ubiquitous. And I think we're getting there with things like Venmo, but you still need a bank account. We're getting there with things like Apple Pay, but I don't think anyone will have a credit card in their wallet, a physical card anymore. I suspect that there may be a digital currency that people use, and that could be a digital dollar that people use like a checking account, and a cryptocurrency that stores value well, like Bitcoin, that people use as a savings account. And I think when we get to a digital currency, particularly if it's a digital dollar, and it's easy to go back and forth between crypto and fiat in a digital way, that this high beta that we see in crypto mellows. I think there's high beta because people don't spend it. People aren't paid in it. The crypto that I hold as an investment. And just like I don't use my Marriott stock to buy groceries or patio furniture on Overstock, I don't use my cryptocurrency because it's part of my investment portfolio. But when we get to the place where people may be paid in it or digital funds transfer easily, then it becomes something we spend. And if I were paid in Bitcoin, I would put like I do today, a certain portion of my income that goes to savings in the future, and the rest goes to living. And when that is Bitcoin and that goes to living, that takes away this huge volatility because it becomes used and traded more often. And it won't surprise me if 10 years from now, that's a place where the crypto space is. Now, I'm not a crypto expert, but it won't surprise me if that digital wallet is a real thing.
Johnathan, thank you so much for the time today. We've actually gone longer than I thought we would, but maybe we've just had too much fun. Have a great weekend. I appreciate the time and look forward to seeing how your company evolves and transforms even further.
Dan, this was a great discussion. You're an easy interviewer. I feel like we weren't eating, but it felt like we were talking over lunch. It was good topics and easy to talk about. So thank you for having me on.
Thanks. Have a great weekend.
Bye.